Good afternoon. Can we start?
Okay, sir.
Am I audible?
Yes, sir.
You are able to see the presentation?
Yes, sir.
Sir, can you please put it in presentation mode?
Sorry?
In presentation mode, sir.
Yeah, I'll go to.
Yeah, now it's fine, sir. It's full screen.
Okay. Good afternoon, all. This is about personal finance. And the way I look at personal finance and also how I do investment in mutual funds. Okay. There may be other ways. There may be hundreds and thousands of ways. But this is my way, how I see investment as a way of thing, and then how I practice it. That will be the initial statement, so that it need not be a generic specific statement. Everybody has his own style of investment, and this is my style of investment, and I am doing it for the last almost 30, more than 30 years. I am doing this way. Okay. So I am invested in mutual funds for the last 32 years. I started my investment journey in 1992 under Unit 64 scheme of UTI, United Trust of India. Unit Trust of India karke, there was one mutual fund floated by Government of India. So since then, I'm investor of mutual funds. Okay. So before we start, what is financial planning? Okay. This is a fundamental question. Basically, it's a how you are getting your money from different sources and how you are utilizing that money for various purposes. Okay. If you combine both of them, then you will have some financial planning. And financial plan will vary from person to person, individual to individual, because the income sources are different and also your expenses are also different. So the percentage of savings can be different, but the principles remain the same. Okay. And one more thing is, if you have any queries, kindly ask me to stop it, and then you can have queries. Okay. This is about this thing. Okay. Before we go into this thing, there are various financial planning tools are there. You can do investment planning, and you can do real estate planning. You can do future if you have if you are forecasting some expenses or some investment you wanted to do, that also you can do. And also tax planning, when you are getting some income, anyhow taxes are inevitable. How do you do tax planning also? That is also there. Okay. So in today's session we are talking about investment planning. So investment planning particularly specific to mutual funds. Okay. So if you have money, so what do? So we save some money, but we mostly spend money. That is our priority.
Please mute those who are not.
Somebody is not on mute. Kindly mute. Okay. So you can see the image size also. This is the actual, the ideal condition. You save more, you spend less. Okay. And through that, you can invest. Okay. So these are the three ways you can do with your money. But if you save, is it enough? You have a inevitable thing called inflation. You know inflation? Inflation means, so your expenditure will increase over a period of time, and your cost of things will increase, and everything will be changed through this inflation. So for meeting the inflation, and then for this thing, you have to save more, and you have to get money or investment returns more than inflation. Then you are positive. Otherwise, if you have 100 rupees today, by after 1 year, if the inflation is 5%, then your value of 100 rupees today will be 95 rupees after 1 year. Okay. Similarly, if you want to buy one item for 100 rupees, if the inflation is 5%, then next year you have to buy it for 105 rupees. This is the simple analogy for inflation. Okay. This is what here it was written. Suppose if you say that 5% of yearly inflation on expenses, so your expenses will keep on increasing. Today it is 30,000. Then after 5 years it is 40,000, and 15 years it is 60,000. After 20 years, the same thing will cost you 80,000. Similarly, if you are saving 1 lakh rupees, it is 35,000 rupees after 20 years. So based on inflation. So these are the basic principles you should know, because if you save in bank as a savings bank account, he may give 3 or 4%. If the inflation is 4% or 5%, your actual worth of money will be reduced. So our hunch is to beat the inflation, minimum 5% you should get, so that your value of money will be equivalent to present day. After 1 year also it will be the same. So why to invest instead of saving? So one is, that's what we were talking about. One is to fight inflation. That is one thing. The other one is to create wealth. Why do you want to create wealth? When you become old and when you are not able to earn money through any source of income, then that wealth will take care of your needs. Okay. And also for better life. Everybody aspires for a better life. Today I am like this, and tomorrow or after 10 years, I should be better than what I am today. So these are the three major things that we invest. Okay. These are various investment avenues. So we were thinking about investment now. So these are the various ways of investing. Especially this is equity investment. So you can do directly purchase equity. So equity means shares listed on stock exchanges. In India, there are two stock exchanges. One is Bombay Stock Exchange, which is very old, oldest in Asia. The other one is National Stock Exchange. So many companies, you name any company, HDFC Bank, ICICI Bank, Reliance Industries, they all list their companies in the stock exchanges, and you can buy their shares. That is direct equity. Their return potential will be very high, but they can beat inflation very high. They can the risk is also very high. So like that, if you say mutual funds, there are two types of mutual funds: active mutual funds and passive mutual funds.
फाइनेंस यार नଥାଏ
रामचंद्र तोष थोड़ा म्यूट कीजिए
पर
ना।
खाई दबो ओडे बसे
Tosh, please mute yourself here. Tosh.
सॉरी
Can you please mute? Okay. So mutual funds are moderately high potential, return potential will be there, and then they can beat inflation very well. So you are sure if you are looking for about 15 or 5 to 15 years, then returns will be much more than inflation. So fixed deposits, they are not at all, they don't have any risk. They will beat inflation. They may be equal to inflation also. And you have recurring deposits, and people also go for 15-year public provident fund, and then organizations will give employees provident fund. You can contribute for that also. Nowadays we have a system called national NPS also, national pension system also. There are compared to all others, recurring deposits and public provident fund, they can also beat, because some of the components of money or some of the money will be invested in equity. So that is why they can beat. These are the various ways of investing in equities. This is returns generated over a period of time in Bombay Stock Exchange in the Sensex. BSE index is called Sensex, and National Stock Exchange index is called Nifty. So the Sensex CAGR is compounded annual growth rate. compounded annual growth rate. Suppose if you keep your money in Sensex, then for 5 years the returns will be 12.8%. For 10 years it is 12.7%. Like that, if you keep your money for about 40 years, every year the compounded growth of investment rate will be 15 rupees, 15%. That means suppose if you invest today, this year, you invest 100 rupees, next year it will become 115. Next year, the interest will be for 115 multiplied by 1.15%. Like that, the compounded interest rate will be calculated. So that will be 15%. It will be much more way ahead than the inflation. Inflation varies from 4% to 6%. Sometimes it may go to say 7 or 8%, but on average 5 to 6% will be the inflation. So you can beat inflation through equities. So there are various ways of investing in equities. You can invest, your investment will be, you can invest in gold, you can invest in property, you can invest in stocks. Some people, they invest in insurance also. And some people, they invest in bonds, company bonds, private companies bonds. And there are bank deposits also, fixed deposits. And the other one we are focusing today is on mutual funds. In mutual funds are anywhere. So this balanced diet, so you can see the plate, it is full of very variety is there. So like that in mutual funds or in equity also, if you have variety or even in investment also, if one asset class is not performing well, like if you invest entire money in gold, sometimes gold may not be performing in some of the periods. Suppose if you invest only in equity, then some lull periods will be there for equity also. Like that, even in our investment journey also, we have to have some component of each of the investment classes so that your diversity will increase, and then so that your risk will be down. Okay. This is about asset allocation. You can have property, and some people who have a lot of money, they can go to art collection also, shares and mutual funds. This right side part we are not discussing. And then left side part also we are not going to discuss. We are talking about mutual funds. So how does a mutual fund work? Basically, if you want to invest in equity, so there are you have to understand the business of the company, and then based on your understanding, then you have to invest in that company. Since we are all we don't have money, time, and also we don't have that capacity to analyze a company and its business, then there is a way to invest is mutual funds. In mutual funds, the way is, if you and I are individuals, we pool our money and we give money to a fund manager. Fund manager will be with a AMC. AMC is asset management companies. There are about 40-50 asset management companies in India. Like you have ICICI, you have HDFC, you have LIC. Like that, there are so many asset companies. They have a fund manager. So they will invest on behalf of all the individuals. They invest in stocks and securities because they know how to analyze a company, and then what are the opportunities, and then they will analyze the business cycles and also the business teams also they will do.
Just 1
Through
minute,
that,
Chandrasekhara garu. Besaja,
the
please
returns
mute.
will be generated. Sorry,
I was
can
telling
you just?
Besaja to mute, and somebody else is also speaking. Watershed Support Services. Kindly mute yourself.
No one is here with me.
There is something called somebody. Some background noise is coming. I'm Hyderabad only. There's something called Watershed Support Services is also.
Watershed is Chandrasekhar sir only. Watershed is Chandrasekhar sir.
Then Chandrasekhar sir is also there, no?
I have joined on my laptop.
నేమాని దగ్గర ఉంటుంది దినేష్ నేమాని దగ్గర ఎవరు
Okay, okay. Can somebody mute Nemani? There's background noise coming.
No. Near Nimani, there is no background music. I'm with him only.
There's somebody called Watershed Support Services who is from there the background noise is coming. I can hear
Shweta?
Pawan's voice.
So, Sweta, can you mute him? Host can mute him. Na?
You're on the phone. It is Nippon. Fourth look last part fourth.
I can hear Telugu language. That's why I'm thinking it's from Hyderabad. Shweta, you at least give us co-host facilities so we can also mute if required.
Yeah. I'm asking Nimani to do that. Just a second. Yeah, Chandrasekhara, now you can unmute yourself.
Okay, am I audible?
Yes, sir, perfect.
Okay. So the fund manager will invest in stocks and securities, and then he will generate some alpha, the amount returns, and that amount will be delivered to investors. This is the process. And also, suppose if you want to buy a share or stock directly, the risk is more, and also some of the stocks you will not be able to buy for 100 rupees or 200 rupees. Some of the stocks may be 1000 rupees, 10,000, even MRF share is 1,30,000 or 1,40,000. You cannot invest. But if you invest in mutual fund on behalf of all the individuals, the fund manager will buy the share, and then he will give the returns. Okay. This is how mutual funds work. So I'm not able to move this thing. Sweta, can you move the slide? I think because I'm presenting. I'm not
Yeah,
able to
you
do.
are only plus. No, sir, actually you are only presenting. It's only you could able to. Sir, escape sir press cheyandi.
Okay. Now I got it.
Yeah.
Is it okay? Yeah. So why
it's
one should invest in mutual funds? It is low cost. That means you can invest. Some of the mutual fund schemes are open for even 100 rupees also. You can start your investment journey with 100 rupees. But majority of them are open for 500 rupees to 1,000. That is the minimum requirement. But some of them they open for 100 rupees also. So you have professional management because the people who are actually managing, they are very professional, and then they know how to analyze a company and then businesses and also the seasons. And then it is transparency everywhere. Your money, even a paisa of money is also accounted for. And through mutual funds, you can do the risk diversification, wherein if you want to buy for your small amount, 5,000 or 1,000, you can buy only one share or two shares, but they will buy a bunch of shares so that your risk will be diversified. Even if one sector is not working or performing well, the other sector can take care of the risk. So liquidity means, suppose if you want to sell mutual funds, you can sell today, and day after tomorrow your money will be credited to your account. So that means it is immediate ready to cash, and it is well regulated by SEBI. SEBI is Securities Exchange Board of India. It's a government of India body wherein they all do this monitoring and this thing of all the stock exchanges. Okay. So it is very convenient because it is very small amounts also. And then the only hitch is you have to forego about 0.5 to 1% of your money as the cost for the mutual fund, because the professionals have to be engaged, they have to do the research and analysis. For that, you have to spend some amount. It varies from 0.5 to 1% generally. There are various types of mutual funds. So open-ended funds and closed-ended funds. So open-ended funds is it is open for public throughout the year, any time. And closed-ended funds are basically equity-linked savings schemes, wherein they will be accounted for your investment purpose also. Okay, ATCC and ATDD, they will be there. And some of them are active funds and passive funds. I'll dwell on this active funds and passive funds later. And the investment are based on investment objectives. There are growth funds, there are income funds and hybrid funds. Growth fund means they will not give you any dividends. So the dividend or amount is credited into the same thing, and it will, if you hold more number of years, then automatically the net asset value of the fund will increase. There are, based on investment, there are different types of mutual funds. One is equity funds. Equity funds are basically, they will invest only on shares. Debt funds are government securities and also the bonds and all those things they will do. And hybrid funds will have both equity, some portion of the money will be allocated to equity and shares. Some of them will be, some amount will be debt funds. And in their prospective statement, they will also mention 65% of the money will be there in equity and 35% will be debt funds. Like that they will give. And the fourth one is liquid funds. Suppose if you have a cash equivalent and you need not keep it in your savings bank account, you can keep it in liquid funds. So that liquid funds can be encashed anytime, and then you can transfer that money to equity funds or any other funds. The other forms of mutual funds are exchange traded fund. I will dwell on this. Gold and silver exchange traded funds. Suppose if you want to buy gold, so you can buy only minimum of 1 gram or some denomination will be there. If it is 1 gram, suppose if it is 6,500 or 6,000, this thing, only you can buy that. Instead of that, mutual funds have floated exchange traded funds. For gold also, it will vary based on the rate, day to day, it will change, and then you can buy that also. And then it will be fraction of 1/100th or 1,000th part of 1 gram of gold. So you can buy for 63 rupees, or if it is 6,300 for 1 gram, and 63 rupees it is available. And ELSS I spoke just now, equity linked saving schemes. This will be counted for your income tax purpose also. Up to 1.5 lakhs you can invest in ELSS. The only problem with ELSS is you have to keep that money minimum for 3 years into lock-in period will be 3 years. But all other schemes, open-ended schemes, you can buy today and you can sell tomorrow also. Okay. There are retirement and pension schemes, overseas funds also, fund of funds also. We will not have more on that. Okay. Let us dwell on mutual equity fund categories. In here also, all the funds are not same. So the first category is multi-cap fund. At least 65% will be on various classes. In National Stock Exchange, the companies are divided into various categories. The first category is large cap companies. That means from top to 1 to 50 based on the market capitalization of the company. So the first 50 are called large cap companies. Then 51 to 100 is called Nifty next 50. From 101 to 250, they are called mid caps. So then, yeah, like that the categorization will be there. Suppose if you take large cap fund, that means 80% of the money will be invested in top 50 companies. If you say large and mid cap companies, so 35% will be in large cap stocks and 35% will be in mid cap companies. They will invest. So the names will be based on the discretion of the fund manager, but minimum 50% he can invest in one stock also, or 2 stocks or 4 stocks or whatever number of stocks, but that will be the minimum category. If you take mid cap fund, that means only the fund manager has to invest in only mid cap companies. Mid cap companies are from 101, from large cap, from the market capitalization of 101 to 250. They are called mid caps. Small cap are 251 to 500. There is one more category called micro cap, from 501 to 750. These are micro cap companies. That means when a fund manager or when AMC, asset managed company, announces a fund that we wanted to float small cap fund, that means they are going to invest in small cap companies, and then get the alpha from those companies. This is based on this thing. And the problem with this thing is, suppose if you are not sure about what sector is performing, then multi-cap or flexi-cap funds are good for people who are new. Suppose if you are young generation, if you are in 20s and 30s, you can go for small and mid-cap companies, because small and mid-cap companies will grow over a period of time into large-cap companies. But the risk will be more, as some of the companies in this thing, they may not be available after some time. Some of them, they go bust, and then they will be bankrupt. But the alpha will be generated more than other large cap and other large cap funds. If you have a time horizon of investment horizon of more than 10, 15 years, then you can go for small cap and mid cap companies. If your time horizon is 5 years, 3 years, 4 years, like that, you can go for large cap. If you are not sure about your time horizon and also not sure about anything, then go for flexi cap or multi cap fund, wherein the proportions will vary. They will invest some of your money in large cap companies, some in mid cap companies, and then they keep on churning the portfolio based on the performance of the individual company and also a sector. Suppose a particular sector is performing right now well, then they increase the exposure to that sector, and then they will invest more on that. And the negative sectors they will remove and they'll sell. This way also you can take. So the other categories are dividend yield. So this I think we have already thought about it. The company will give you dividend. The companies, some of the companies, they will give dividend. Regularly they will give. Suppose if you take Vedanta company, they will give Hindustan Zinc or some companies, they will give every year, they will give dividend. So this fund will invest only on those companies who are giving a dividend. Like your banks also gives a lot of dividends every year. And then focused companies and sectoral and thematic funds are very volatile and very risky for shorter duration, because if the sector is performing, then your alpha will be more. If the sector is not performing, then the net asset value will go good. ELSS, I think we have already discussed that ELSS, they can you can invest in them, and then locking period will be 3 years, and then that can be counted for your this thing tax purpose also. This already I think 80cc up to 1,50,000 you can invest, and they generally invest in equity, and then whatever the market performs, based on the market performance, the returns also will be there. And minimum locking period is 3 years. After 3 years only you can sell these things. If your time horizon is 3 years, and if you want to avail the tax benefit, you can go to ELSS. Hybrid funds are basically a mix of debt and equity that we have already discussed. This also we need not discuss. This will be our focus. Index funds. There are so many indexes like your Nifty. Okay, just give me 1 second. I'll open one sheet and then I'll show you Nifty indices. By the way, all these funds are regulated by Government of India through SEBI. Okay, are you able to see my screen?
on.
Shweta, is it
Yes,
visible?
కనబడుతుంది. కనబడుతుంది. Yes.
What did you say? Is it true? Okay.
Only presentation is visible.
No, I didn't. Is it visible?
So we can see the presentation.
కాదు, మీరు ఇక్కడ ఇండెక్స్ ఫండ్స్
visible,
వస్తుంది,
sir.
మీరు అక్కడ చూపించే వేరే వస్తుంది కదా. రావట్లేదు.
What did he say? Website.
Sir, slide 23.
Yeah. Please. Wait. Okay, I'll share. What to do? Yeah. Okay. Where is it?
Click on the Zoom. Go back to the meeting. Check on the double check on this. Yeah. Now share. Now your Chrome screen. Scroll. Go to the first post. Okay.
Enter screen, huh? Is entire
Click on that. Entire screen share.
Okay, you start.
Yeah. Now go to the equity market. Yeah.
Is it visible now?
Yes, sir.
Okay. This is about Nifty 50. These are the stocks available in Nifty 50. This is called a large cap stocks. So you can see an alphabetical order. I am just saying Adani Enterprises, Adani Ports, Apollo Hospital, Asian Paints, Axis Bank. These are all the stocks that were there in Nifty 50. So if you invest your money in large cap funds, they will invest in all these, out of all these 50 companies, they will invest. Okay. Suppose if you are investing in Nifty Next 50 or Junior 50, this thing, then they will invest on the Trent, Naukri, PFC, HAL, Hindustan Aeronautics, BEL, VBL. Like that, these are the companies they will invest. And similarly, if you are mid cap 100 shares, then they will invest in these companies, whatever listed here. So if you can go to nseindia.com and then you can see what are the various types of indexes. These are all indexes. And then you have mid cap 150, small cap 50, and like that the market is categorized into various indices. Okay. Are you able to see Nifty small cap, Nifty 250, Nifty 100, Nifty 200? Then there are sectoral indices, Nifty auto, Nifty bank, Nifty energy. These are all thematic, these things. Suppose if AMC announces a fund like Nifty energy, thematic energy, then the companies in which are listed down here, they will invest in these companies. ONGC, BPCL, Reliance, Coal, like that. These companies, they will invest. That means thematic means you will have some problem if you are holding for a shorter period of time. But broader market, Nifty 50 or Nifty 100, Nifty, Junior Nifty, and all those things, they are all generic. They are not for a specific theme or specific purpose. Okay, so then how to go to the other this thing?
You go, it will screen will show you.
Acha. PPT one.
Just click on the PPT. It will be visible. Yeah.
Okay.
Everything that you show on the screen is visible.
Acha. Okay. So this index funds will replicate the index. I'm not audible there. Okay. So these index funds will mirror the fund. Suppose if you want to invest in Nifty 50, that whatever Nifty gives, automatically your fund also will give. Exactly what Nifty 50 gives, your return will be similar to what Nifty 50. If you want to invest in Nifty mid cap, then whatever the Nifty 250 gives, then that mirrors your return. That means you need not worry about even stock selection also. So you just invest in any index fund, and they will mirror the returns will be mirroring with the index returns. So whatever the 50 companies over a period of 1 year, 5 years, they will give the delta. That delta will be given to your fund also. This is the least thought about, and then you, without any thinking, you just directly invest in this index funds. It will give you the return. So you need not worry about mid cap, small cap, flexi cap, and all those things also. So whatever the indexes will give, then that return will come to you. So they mirror the market index based on the whatever index we do, and whatever the companies are there in their similar proportion, they will invest their money also. And it is a passive fund management. So even the fund manager also does not have any role. He will just whatever money we give, he will invest in all those companies in that proportion of each company. That's all. And a smaller risk. Index, whatever index gives, then you will also get. But and here one major advantage to this one is maximum you can he can charge only up to 1.5%. The charges, no, the AMC charges will be maximum 1.5%. Initially, if the fund is very small, your charges will be more. If the fund is 10,000 crores, 20,000 crores, or 50,000 crores, automatically your charges will get reduced. I will show some slide on charges also. Okay. This is exchange traded fund. This is also similar to your index fund only, but it will be trading like your stocks in the stock exchanges. You can buy on daily basis. Morning you can buy, afternoon buy, you can sell tomorrow, today buy, and today also you can sell. But all other mutual funds, passive funds, and all other funds, you have to, if you buy today, at the end of the day, they calculate the NAV, called net asset value. For that, based on some companies, they go down, some companies, they increase, and then they calculate, and then they'll see, they say that net asset value today is 45 rupees per unit. That means at the end of the day, even if you invest today morning or afternoon or evening, the units will be allocated to you after the end of the day calculation. But exchange traded funds, so they will vary, they will do like your stocks. Okay. So I'll go to that exchange traded funds, and then you can see some of them also. I'm there in NSE, National Stock Exchange, this thing. Okay. So there are about 181, 200, 212 exchange traded funds are there. You can invest in those ETFs which have maximum volume, so that your liquidity problem will not be there. Suppose gold bees, the current rate is 58 rupees, close is 58 rupees 69 paise. So if you want to buy one ETF of gold, that will be 58 rupees 69. But if you want to buy gold, physical gold or any gold, you have to buy 1 gram or whatever. So here you can buy 2 units, 3 units, 5 units also you can buy. Silver bees is also there. Like that, CPSE is Central Public Sector Enterprises ETF. So the companies, they will list all those 10 or 20 companies, and they will invest in that. Okay. These are index funds, but you can buy and trade and on a daily basis, like this. Then pharma bees, and then there are gold also. Various companies float. HDFC will float one gold fund. ICICI Bank will float. Nippon India, like that. All companies, many of the companies have similar type of this thing. So depending upon your this thing, you can choose wherever your charges are less. You can choose that type of fund. Okay. This ETF is also the only advantage is, instead of waiting for the day, suppose if today the market is down, you can get ETFs at a lower rate. And tomorrow, if the market is going up, tomorrow you can sell it. So those people who have lot of time and who are active in with the screen, they can do this type of thing. But for us in Vasan, my this thing is advice is only go for passive fund or any multi cap or flexi cap of type of those things. You can start with even 500 rupees also. Okay. So then where is that next here? How to go to the
Just go to it straight. Yeah, it's visible on screen. Okay. Now you slideshow.
I'll put it slideshow. So these are gold and silver exchange traded funds. Just now we saw some values for that also. It is also similar to, it varies from, suppose if silver rate decreases or increases, automatically the value increases. Similarly, gold and silver, you can trade. But for all doing all these things, you need a demat account. There are international funds also there. So you can invest in international equity also. NASDAQ companies are listed. Some of them, about 4 or 5 NSF managed companies, they floated international funds also. You can invest in all this. Suppose if you are very bullish about American market, you can buy exchange traded fund. Through exchange traded fund, you cannot buy shares of NASDAQ listed companies or New York Stock Exchange listed companies. You can buy through mutual funds. Okay. Basically, any mutual fund scheme, you have to buy based on your risk appetite. If you have sufficient time on your side and you can take risk, if you are young enough and you can wait for more time, then the compounding effect will be much more than the other thing. So you can take risky bets now at the age of 20s and 30s. But when you are in 60s or 50s, then you have to reduce your exposure to equity and then more of debt companies, debt like your hybrid and then debt mutual funds you can. Okay. So there are direct plans and regular plans. A regular plan is through a intermediary. Suppose some mutual fund agencies also will be there. Intermediary will be there. You invest through them. If you invest through them, then you will lose some amount. If you directly, they will also get some cut. Intermediary will not do anything. They will also get some percentage. So if you do directly, then the intermediary charges will not be there. So your cost of acquisition will be less, and your return will be 1 to 2% delta will be there between those two. Suppose if you are getting in regular this thing 12%, you may get 13 or 14% in direct plans. Direct plans now anybody can do. You can open demat account in any company. Only you have to give you some ID card and then address proof and all these things. And then many of them they give for minimum charges are even free demat account also they will open. Okay.
Charge during the exit time.
Yeah. If you are exiting within 1 year, some of them they will charge 1%.
So annual charges, maintenance charges.
Annual maintenance charges will not be there for mutual funds. Demat, some companies they will give you free. Some companies around 150, 250 rupees they will charge per annum.
Your bank account is also.
Yeah. Even your SMS charges also they will charge per season, per quarter they will charge some 67 or 100 rupees per SMS charges. Some amount, even your bank also charges. They will also run. Okay, there are growth option and dividend option are there. So dividend, suppose if you want to, if you have opted for dividend, then whenever the company, the AMC announces dividend, that dividend amount will be credited to your account. If you have more number of shares and if they declare dividend of 0.5 rupees, if you have 100 units, then 100 into 0.5, 50 rupees will be credited to you. But my suggestion is don't go for income distribution through dividends. You go for growth and direct funds, so that you will not disturb that money, and then your compounding effect will be much more number of. If you get 50 rupees or 1,000 rupees, you will spend somewhere. No? But if it is there inside, you cannot draw and then do it. Okay. How to do it? So you can do various ways of doing it. One is lump sum amount is at a time, if the market is down and then you think that market is down and you wanted to invest, you can directly invest so much money, whatever money you have. If you have a lot of money, then you can invest. Lot of money doesn't mean crores. It can be 10,000, 20,000 also. But the SIP in SIP you can start with 500 rupees or 1,000 rupees per month. Okay. The other one is systematic transfer plan. It will be useful for Jaya and Chandrasekhara like people. You have some money, you park it in some way, and then transfer money on a monthly basis to the fund.
Transfer money to?
A fund. So you have chosen one fund, debt fund. If you park money, you will get only 2 or 3% as savings bank account. Okay, that too it will be tedious once. So you will have to pay that money. So instead of that, and then you are not sure about the market whether it is on top or down. So you can do on a month wise or even 15 days wise also. You can transfer. You can give a mandate to the organization. Every month I wanted to transfer 1 lakh money to that, so that you need not do it at a go. Suppose if the market is now today at the peaks, right, as on today or for the last 1 week, if you invest your whole money right now, if the market goes down, then automatically your value will go down. So that is why one alternative is, if you have a lot of money and more surplus, then you transfer that money through in tranches. Kind of PPF. Yes. And you can switch from one scheme to other scheme. Earlier, this was not allowed. Now, SEBI has mandated that I am in multi-cap fund, then I can go to any other thing also. Or from that scheme to this scheme also, you can transfer your money.
So same amount.
Or that day, whatever the NAV is there, you have NAV value, you have a number of units, you multiply both of them and you get the money, and the same amount of money will be invested in other scheme wherever you want it to be. Earlier, this thing is you have to redeem the units, get money into your bank account, and then again you have to invest in the other fund. Right now it is not there. You can give just mandate that I wanted to shift from right now I have units here, I wanted to go for that, and then automatically it will be shifted, and then you will get a statement.
Can someone help us to open the accounts?
5 minutes, you come to me, just 5 minutes, come with your PAN card and Aadhaar card. 5 minutes, PAN card and Aadhaar card, I will help you. Okay.
Take time from your.
Okay.
Yeah, madam.
Huh? If it is already linked, no. Better your KYC bank. You have to do KYC for the bank. I'll come to that also. Okay. Recently we have opened for 2-3 people, including Ravindra also we have opened. Okay. So this systematic investment plan, this is the best plan for all of us. I'm also youngster like you. Okay. So you can invest small chunks of money on a monthly basis, so that you will have some discipline in your savings, this thing. Okay. Every month, whatever you can spare that amount, 500, 1,000, 2,000, 10,000, depending upon your salary and sparable amount, you can opt for that, and then automatically the amount, you can give the mandate to the bank mandate you can give, and automatically that amount will be transferred from your bank account to that. And also you can choose the date also. You can choose 1st, 5th, 10th, whatever date you choose. Every month that amount will be credited to your from your bank to that fund. automatically, and then you will have a rupee costing average also. Suppose now, right now the NAV is 20 rupees. So next month, if it is 18 rupees, you will get more units for the same amount. Okay, and next month it has gone to 15. Theoretically, I am just saying. Okay, you will get more. Suppose if it is it increases from 20 to 21, you will get less units. Like that, averaging you will get it, and then your money will multiply. Okay, so basically, for small amounts, you need not say that I have only 500, I cannot invest. Even with 500 rupees also per month, you can start. And I strongly advise all the people who are attending this thing, you start doing that. Oh, you are doing very good. So this is only for illustrative purpose. It is not guaranteed. Okay, suppose if you invest 1,000 rupees per month, and then if that fund gives 8%. Okay, so if you start investing at 25 years age, your investment will be 4,20,000, and you will get 23 lakhs. Okay, and if you start 35 years, it is only 9.5 lakhs. If you start at 40, it is 5.92. But generally, this is not the return of any mutual fund. Mutual fund returns will be on an average in my 32 years of this thing. It will be minimum 18% if you are opting for more than 10 years. 18%. But 15%, even if you are there for 5 years or 6 years also, you may get. Because your investment has to pass through the cycles of troughs and heads. So now the market is at the peak. So if you are there with the mutual fund for the next peak then you will have much more money. Suppose if you are investing now, after 2 years the market goes down, the cycle is a downward cycle, and if you want to withdraw money, then you will be, if you invest 1 lakh, then your worth will be maybe 65,000 or 75,000 or 85,000 also. So that type of cycles you have to withstand for 2-3. The maximum number of cycles you are there with the mutual fund, that particular fund, then automatically your money will grow. So that is basic minimum. So whatever you do, so think that money is required for you tomorrow, day after tomorrow, or after 1 year or 2 years. Yes. So if you think like,
This is for 10 years. What is that 25?
You have started at 25 years age. Every month you have invested 1 lakh rupee, 1,000 rupees. Okay, after 60 years you will get 23 lakh. If you are 30 years, your investment will be 3.6 lakhs, and after 30 years you will get 15 lakhs. This is the base minimum 8% he has calculated, but you will get minimum 15-18%. Some of the schemes.
Bindas
Bhaiya.
Jayavardhan. Bindas Jayavardhan.
Satish, can you just mute yourself?
నేను వాళ్ళకి ఆగమని చెప్పాను నేను వాళ్ళు మాట్లాడుతున్నారు.
Acha, he is asking. Okay.
Banker told me one scheme. Banker, SBI banker. He told me to invest 1 lakh rupees. So I invested. I don't know what is the mutual fund that suit me, but within 1 year, I got 50,000 more.
Okay, that depends on the cycle, madam. You might have started at lower trough, and then you might have got money like that. Okay, we will talk one on one. Okay. So this is what I am. Suppose if you are investing, if it is a rising market, suppose if you invest NAV is 10 rupees, and then you will get 100 units. So next month, if it is 10.5, you will get only 952 units. If it is 12 rupees, 14 rupees, like that, the units will be allocated. So total units will be, in a rising market, you will get to 4,643. If it is a falling market, so your NAV will get reduced, 9, 11, like that it will vary. So based on that, the units will be allocated to you. So that even if you are still continuing that SIP even in the market, when market goes down, then your accumulation will be much more. so that your average cost of acquisition will get reduced and ultimately you will get more benefit.
Discipline is like which one is the discipline that we have to follow?
Where?
Falling market.
Discipline is, suppose if your investment from 1 lakh to 85,000 has gone down, then if you withdraw and if you stop SIP, then you are not a game for that. So even if the market goes down, if you think that 10 years is my horizon, you keep on putting the money, keep on investing, so that automatically your money grows. Then systematic withdrawal plan is also there. Suppose you have accumulated so many units. Suppose 40 lakhs worth of money is there, or 1 crore worth of money is invested in that. You want to regular withdrawal of money, you can give mandate that I want 1 lakh money every month withdraw money. So they will sell 1 lakh worth of units and then credit money to your this thing also. So that means it is just like a bank account wherein you can go and give voucher or you can give check or withdraw money. You can withdraw money also. Okay.
Sir, is it like, sir, will it credit into our account?
Only our account. Your whatever the bank account you give, it will not go to any other account. It will come to your account and it will be withdrawn from your account.
Which account you are investing that?
If you give SIP, automatically it will go. Auto deduct. Okay, it will go. So the prerequisites for investment is KYC, know your customer process. You should have PAN card and you should have bank account. And the bank account, your mobile number should be linked, and your Aadhaar and PAN, they should be linked. And the bank also, that process is there. Once that is there, it is a 5-minute process. So you have to give address proof, Aadhaar card, all these things are whatever is available. If your bank account is active and then everything is there, then automatically it will be done. Okay. So some people they ask what is net asset value. Net asset value is like your share price or this price on a particular day. If you have so many stocks of Reliance Industries and it has gone down, and you have X number of shares of HDFC Bank, it has gone up. So they will calculate the positives and negatives, and then from previous day what will be the increase or decrease, they will calculate and then tell you NAV. So you can go to any website and then Google like NAV of mutual funds, you can type, and then NAV will be displayed. So NAV is the critical unit where suppose if NAV is 20 rupees, if you invest 10,000 rupees today and NAV is 20 rupees, then automatically 10,000 divided by 20, you will get that many number of units. So and some people the FAQ is, if the NAV is less, we will get more units. If NAV is more, we will get less units. It doesn't matter whether NAV is more or less. It is the percentage of change that matters. It is percentage change that matters. So whether NAV is 10 rupees or 20 rupees or 100 rupees or 1,000 rupees, it doesn't matter. You can invest in that scheme. Okay. Some people they compare gold and this thing equity. Okay. So Sensex in 1980 it is 100 value. In July it is 81,350. So the multiplication factor is 814. So gold it is in 1980 it is 1330. As on that day it is 63,400. The multiplication factor is 48. Yeah. Okay. So like that, equities, if you have a longer horizon, they will outperform any asset. And the other thing is, people ask for real estate. If I go to real estate, if I invest a big piece of land, then what is the comparison between the real estate and then equity, mutual funds per se. In real estate, you have to shell down a lot of money at a time. Number one. But here you can start with small chunks of money, you can accumulate. Then liquidity is a problem for real estate. That means if you want to sell a land worth of 1 crore rupees or 50 lakhs, then you have to wait till the buyer comes and till the demand is met. But here you need not wait. If you want to buy gold with this thing, you can sell today and day after tomorrow you can go for shopping. Okay. So liquidity will be here and you can invest small quantities of amount, small amounts here and then accumulate your money. And the returns also will be much more than your gold. Yeah, these are some of the schemes. Nippon India Growth Fund. How to remove this setup?
There's a cross button there.
One second. This is over a period of 20 years. Okay. Dividend final value. So this is suppose if you SIP 10,000 or 20,000. So that will be it has gone. It has given 19% average for 20 years. Some schemes 18%. Some schemes they give, even Nifty has given only 12.74%.
Is it like a simple interest?
It is
it like
CAGR, compounded annual growth rate.
Actually, this is compounded growth rate.
Yeah. This is the other one is lump sum investment. Even if you invest, that is SIP, this is lump sum amount also. They will also give. So the final point is whether you invest in lump sum, whether you invest in SIP, there doesn't have much difference. Almost you will get 1 or 2% will be difference. Suppose your lump sum investment is done at a market cycle where it is at the lower level, then you will get much more.
Chandu.
Sorry.
Chandrasekhar, it is important to understand that what bank interest rate is giving is a simple interest rate.
Yeah.
But you are saying what you are showing here is a compound interest.
Yes, please. Yes.
Is it right?
Yes.
It's not like I am getting say 7% on FD. Here 7% here, 7% in FD is not the same.
Yes.
Right? So this is a compound growth rate. It's like Chakravarti laga anamata. Yeah.
Negative was negative when the market goes down, automatically your net asset value goes. That is why you are not there. You came just now. If you are there with that mutual fund for more than 10 years, 20 years, 15 years, this will be the this thing. So suppose if you invest today, market is on top. Then you want to sell it after 1 month or 2 months, market goes down. Automatically your net asset value goes down and your 1 lakh worth of money may go to 65,000, 75, 85, whatever on that date. If it is shorter periods, you will get negative returns also. If you are longer periods, then you will get much more. Okay. Okay, that's all. The future depends on what you do today. Okay. Okay. So the future depends on what you do today. Ravindra, please.
No, I want to ask all the colleagues, what do they think? Can few people come up and then say? See, basic message is, I was also ignorant of the whole thing. Till that recently, I also started. See, the best thing looks like, put some money as and when you can into some SIP. So somebody is managing that. Market law, there is always a risk. I mean, that cannot be 100% this thing. But over time, there is no risk. That's the message. So the best way I feel is to, I mean, I could have actually known this and then put some money, this thing, some money would have been accumulated by now. So this is a message to the younger colleagues, put some money whenever you can into this. That is the message Chandu is giving. What do you think? Is it
if someone wants to?
Yes, sir.
It is a good, Ravindra sir.
Yes.
It is a good opportunity. I am also investing from last 2 years.
Very good.
So और इसमें काफी मतलब हम अगर बैंक में डिपॉजिट करते हैं तो बैंक हमें 7.5 या 8% देता है ईटी पे। तो और इसमें एनुअल में मुझे अभी 25% रिटर्न मिला है म्यूचुअल फंड में।
Very good. Okay.
तो
So
मतलब
7% FD and then 20% mutual fund return, they're quite different. Yeah.
हाँ मतलब ये एवरेज है। और इसमें मतलब मिड कैप स्मॉल कैप फंड लार्ज कैप फंड तो मतलब इसमें भी रिस्कियर है। मतलब स्मॉल कैप फंड अगर हम चूज करते हैं तो इसमें रिस्क ज्यादा है, लेकिन अगर कोई रिस्क लेता है तो उसमें रिटर्न भी ज्यादा होता है। लेकिन
हो
जो
सकता है।
हाँ अगर लार्ज कैप फंड लेते हैं तो वो सिक्योर और रहता है, मतलब सिक्योर इनकम देता है और रिस्क कम रहता है उसमें। लेकिन
Yeah.
रिटर्न भी मतलब 15 से 20% तो हम हर साल मानेंगे मिलता है इसमें।
Yeah. That is your experience. Can anybody who hasn't started, can you share what is that you think now? कोई जो अभी तक शुरू नहीं किया, आपको क्या लग रहा है, थोड़ा बताएंगे?
I'll not watch for that.
हेलो
सर मेरा नाम मनसुख है।
हाँ यस मंसूर।
तो ये सर मैंने ज्यादा नहीं 5-6 महीना से सर हमने शुरू किया है। पहले हम वो ये ओपन किए थे, उसके बाद हम क्लोज किए थे अकाउंट। इसके बाद अभी 5-6 महीने से शुरू किए हैं वैसे ICICI प्रूडेंशियल में सर, म्यूचुअल फंड में।
ओके, सो व्हाट इज योर एक्सपीरियंस?
हाँ सर, इसमें जैसे समाधान बोला है कि इसमें 24% तक आता है ये रिटर्न। अभी तक मेरा 15 से ऊपर ही है, 15
Okay.
20 18 उतना ही है। जैसे कि बैंक में 8% 8% देता है, 11% देता है, इसमें 15 16 20 24 तक भी गया है।
वेरी गुड, वेरी गुड। सो अभी तक इन्वेस्ट नहीं किया, can somebody, Chandu, you can close the sharing, let us see people. Can you tell your impressions? क्या लग रहा है? Leela, Satish, I'm just going through this thing. Ashutosh.
I'm investing, sir, 15,000 per month.
Very good, very good, very good. Sridhar, you are also doing?
Oh, sir,
Sir,
Din-
अभी start करना है।
now I am planning.
Start करना है. Okay, good. Dinesh?
I'm the least bad at all this. तो कुछ अपने basic savings नहीं कर रहा है, पहला वो कर ले।
Don't tell me you don't have time.
Whatever it is, मेरा basic है तो PPF कर लेता हूँ पहला, उसके बाद फिर ये हर बार गाली देती रहती है। Investing तो
PPF तो
दूसरी बात है।
ऑटोमेटिकली हो जाता है ना, उसमें क्या है?
मेरा कुछ नहीं हुआ उसका, some issue is there. तो ठीक है।
No, I mean, see, if any of you wants to start, if you need time, support, then Chandu or somebody who is already doing can support you. How to open this SIP funds and all that. There's several people amongst us who are investing, but it is important to manage your finances. देखो ये पूरा uncertain world है. अभी इस एज से अगर नहीं शुरू करेगा तो मुश्किल होगा आगे जाते जाते. ठीक है, I seriously urge all of you to sort of start thinking, start doing your investment plans. Okay? ठीक है. So anybody wants to do it, then the support is available, Chandu.
Yeah. Ravindra, Prasad is asking, and Sunny is also raised his hand.
Yeah. Please go ahead.
Sunny is everywhere. Sunny everywhere.
Sunny, go ahead. Sunny, you are on mute. You are on mute.
Sunny, you are on
you
mute.
are not
You
audible.
are on mute.
No, he's not on.
No, can't hear you, Sunny.
ఇంకా మీట్ లో ఉన్నారు సార్.
No, Sunny, you can't hear. We can't hear you.
రీకనెక్ట్ చేయండి సార్.
Sunny, we can't hear you. Okay, Gautam, what do you think? What are you doing?
Sir, I
Thoda
was
sabko
doing in
samjha?
small startups or small entrepreneurship to develop them. By the thing I am doing from last 3 years is I'm investing in entrepreneurships.
Okay.
I have invested 2 entrepreneurships, 2 or both are okay. I'm only expecting 5% from the them.
Yeah, Nimani message something. Can somebody read out? Nimani, what are you doing? Nimani sent a message in the WhatsApp, I think. Nimani saying, hello, I have been investing every month since last year. The last time I made an MF investment. What is
NPS is good for your this thing retirement. It will get more return than your PPF and others. And then some component will be invested in equities, and then generally they are getting about 11 to 13% on an average.
Sir, actually, that we have 2 types of accounts, right? Like tier 1 and tier 2. So which is good?
Yeah.
చందు గారు
We have 2 types of accounts.
ఇప్పుడు 15 years దాటిన వాళ్ళు ఇన్వెస్ట్ చేయొచ్చా దీంట్లో?
Tier 1 only you have to open, and then tier 2 later will be open. Okay, sorry.
The 30 years ఉన్న వాళ్ళకి బెస్ట్ ప్లాన్ ఏంటి సార్? ఒక 12% 13% వచ్చిందంటే
నా దాంట్లో జాయిన్ అయిపోవచ్చు.
30 years.
యా సార్, నా ఏజ్ కి
అదే చెప్తున్నా అండి. 30 years or 20 to 30 years you go for any small cap fund or mid cap fund
without any risk, right? I want it without risk.
That is what I am saying. You are saying 30 years and without risk only. I am just saying from my side.
Okay.
If you are there for 30 years, how many years you wanted to be there with that this fund?
I can pay for 20 years.
20 years, go for any mutual funds that invest in small and medium cap companies. And I can suggest some names also, but I will not tell in public. I should not tell. If you talk to me, then I will suggest some this thing also,
Sure.
exact names also.
Thank you, sir.
Because I am not supposed to recommend anything.
What age did you start?
32 years back I started. Around 25, 26, 27.
Okay.
That I lost money through equity, direct equity. I lost lot of money.
How much?
About 18 lakhs in 2008.
Recession.
18 lakhs in one go.
One go. That is okay, because if you are if you don't know anything about equities and if you are not sure about this thing, then you will lose money. I learned my lesson.
You were investing in future options.
I will tell. We'll talk one on one. Okay. This is about only mutual funds. I lost money in equities because I lost money. That's all.
Very humble though.
You also invest in
Chandrasekhara garu, this
No.
is Prasad. This is Prasad. Do you hear me?
Chappandi Prasad garu. Yes, please go ahead.
Yeah. Your graph shows only 40 years category, up to 40 years category, but we are in 50. Is there any suggestible investment for us?
Yeah, I am investing even right now also.
Okay.
And my age is 59.
Yeah.
I am 59 and I am still investing. So we can talk one-on-one. ఏం చేయాలి అనేది నేను మీకు చెప్తాను. నేను చేసేది చెప్తాను. అది మీకు నచ్చితే మీరు చేయండి. You can do if you are okay with that.
Okay. Thank you. Thank you.
So do we have to diversify our funds or like property?
If your age is less than 30, you need not diversify. They will take care of diversification. SIP in flexi cap or multi cap, then that will take care.
Nice.
Any others? I have some other workers.
సార్ నేను వినుతున్నాను సార్ మన సిప్ కూడా కవర్ అవుతుంది సార్ దీంట్లో సిప్ అనేది కూడా దీంట్లో సిప్ ఉంటుంది
SIP గురించి SIP చెప్పాను నేను
జాయిన్ అయ్యాను నేనైతే రికార్డ్ తీసుకుంటాను
ఓకే SIP you can do
యా ఓకే
apps for
IT రిఫ్లెక్ట్ అవుతుందా సార్
సారీ
IT రిఫ్లెక్ట్ అవుతుందా సార్
IT if you invest in ELSS equity linked saving scheme then they will be counted for tax saving.
IT రిఫ్లెక్ట్ అవ్వకుండా ఏమైనా ఉన్నాయి సార్ వితౌట్ IT reflection
all these investments if you sell before 1 year then your short term capital gains it will attract. If it is more than 1 year then your long term capital gains, short term capital gains will be 12.5% for mutual funds. If it is long term capital gains, it is 10% after 1 lakh profit. Up to 1 lakh profit every year you can take that profit. After 1 lakh profit, then the additional amount will be taxed at 10%.
No.
చంద్ర నర్సింగ్ ఏదో అడుగుతున్నాడు చాట్ లో.
చెప్పండి, ప్లీజ్ గో హెడ్.
చాట్ లో there are questions in the chat box.
I am 50. Please suggest me.
I'm going.
Best plan for us.
Ramachandra Tosh, I am continuing my investment journey from 2 years and it helped me a lot during the financial process. I have also enough capital gains, received minimum 25% annually, again SIP and mutual funds. That is good. I am 50 years old. Nursing is asking 50 years old, suggest best plans. I will suggest best plans. If they work out, they will become best plans. If they don't work, then they will not become best plans. Okay. Nursing, I will talk to you.
Okay.
One more question. Nemani, I have been investing every month since last year. The last time I made a mutual fund, I am going to take new mutual funds tomorrow. Congratulations. If you need any help, kindly... Sorry?
వాసన్లో ఇన్వెస్ట్ చేయడానికి ఏమైనా ఉన్నాయా సార్?
వాసన్లో మ్యూచువల్ ఫండ్స్ ఎక్కడ ఉన్నాయండి?
పామీజీ.
I will not recommend right now because they are startups.
Amazino Manengain lo shares unte kono Gautam.
Manyam వద్దు సార్, పామీజీ.
So that's all, Ravindra. That many questions are all there.
So let us thank Chandrasekhar for
thank you so much for your valuable time, sir.
For all this thing. Yeah. So I hope this inspires all of you to start looking at investments.
Record.
If anybody wants to connect to me, yeah, please connect. No issue. I will try to facilitate that process. Okay.
Sir, record ever దగ్గర తీసుకోవచ్చు.
Nimani will share the record.
Okay.
Nimani will share.
Thank you. Okay. Thanks, Chandru.
Thank you all.
Thanks a lot.
Thank you so much.
Thanks.
Vinutna is from RA.